Welcome, everybody. This is Chapter 4, Banking. So what I'd like to do at this point is to share my screen. Okay, here we go. QuickBooks Online, Chapter 4, Banking. These are the learning objectives of Chapter 4. We're going to learn about the check register, and we'll be viewing the check register. And what is a check register? Well, it's all the ins and outs of an account, right? And what you can do, not only when you view it, you can drill down to see the source documents. You can even use the check register to add new transactions. Also, we'll be talking about money in. That would be recording bank deposits, and money going out, where we will use the expenses form and the checks form, okay? And also in this chapter, this is very interesting. I'll be teaching you how to connect QuickBooks to your actual bank accounts. And so the transactions that are on the bank will flow right into QuickBooks automatically. And then from there, you can, accept them by hitting the match button. If there are certain transactions on the bank statement that you didn't do in QuickBooks, you can add them. It's going to be kind of interesting. And of course, like always, there's accounting essentials. And in that, I'm going to show you a little bit about a traditional bank reconciliation. In this chapter, we don't do the traditional bank reconciliation. It's because now with technology, a lot of folks are pairing their QuickBooks with their actual bank accounts, and it makes for an easy way to keep your accounts reconciled. Okay, so as far as the SAT nav, we're focusing in on transactions, specifically banking. Okay, so just remember that all we're doing is banking. Money coming in, money going out. Now, the check register is a record of all transactions affecting the checking account. And what kind of activities would it include? Bank deposits, money into your bank account, bank transfers. You're taking money from one bank account and transferring it to another bank account. Bank checks, those are amounts that are going out of your bank account. And then also you can enter and pay credit card charges. That's, again, money out of your bank accounts. I'll take a look at this bank register, right? We drill down here, and this is for checking 1001. Notice here that you have the date of the transaction. And as far as the type, notice that you have, like, this is expense, and this says deposit. Well, this gives you a clue of what form was used to enter this into the register. For instance, if it says expense, you entered it using the expense form. So here, looks like you paid Carol Designs Media. And why did you pay it? Well, for advertising and marketing. So this is going to be advertising and marketing expense. Notice that the payment was $1,000, and of course that's going to reduce your bank balance because you made a payment. Now, if you had a deposit, that came from the bank deposit form. And well, why did you receive that money? Well, here it's because the owner invested into the business, right? And so that's why we're going to use 3003, owner's investment. And notice that a deposit will be put over here, and that will increase our bank balance. Now, some small businesses may only use the check register. Can you believe that? You could do everything right here and not really harness all of the features of QuickBooks. I wouldn't suggest you do that, but if you're a small business and it's quick and easy, okay, more power to you. But anyway, to add a transaction, you would just go over here to the down arrow and select what you want. In this case, we're selecting to make a deposit. Okay. Now, this is it page 192? Let me take a look. Yeah, 192. Make sure that you have this ending balance for checking 1001, 28,080. And what makes up that balance is what you did here in chapter 3. So if it's not correct, fix it now. Okay, fix it, and it's easy fix. I had to do it. I had a little error thing going, and I had too many transactions, so I had to back it out, but I made it work. So if you're in that situation, make sure you fix it and make sure that that balance is 28,080. We want to keep you on track with the textbook, so next chapter, it's going to work, or even this chapter. Actually, if this is not where you started out, your bank balance is not going to be right. Now, as far as money going in, there are 3 main ways to record that money coming in. One is using sales receipts. And I think I told you this in chapter 3, but sales receipts is just cash sales. So you receive money because of a cash sale. So when you think of, in QuickBooks, sales receipts, you think cash sales. That's why you receive the money. Now, you can also bill your customer, or actually maybe it's better to say you invoice your customer. So when you do that, now you have accounts receivable. But at a certain point, your customer is going to pay you what he owes you. So that's you're going to be using receive payments, and that's collection on account. Now, we'll be working with these two in a later chapter. This chapter focuses on the bank deposit, deposits not related to customer sales. Okay. Well, what are some examples of deposits not related to customer sales? Well, investments from company owners. So you think about it, behind the scenes, you're going to receive, the company is going to receive money, debit cash, and then you'll be crediting the owner's equity account, whatever it would be. Also, if you received loans from a bank, or you received money for interest earned, or other income that's not the primary source of income for you, like rental income, right? Well, what does the bank deposit screen look like? Well, to get there, new bank deposit, and then this is it. You have to say, well, what account am I depositing it into? In this one here, we're putting it into the checking account. You put in the date, and then you put in received from. That would be like if it's from the owner. You'd put in the account. Let's say that the owner invested money in the business, so you would put this as some type of equity account. Make it a description, and then the payment method. Well, how did the owner put it into there? Well, let's say did it by check, so you'd put check and put in the amount. You can also add more detail to what kind of transaction this is in the memo section. You can even attach any source documents. I really like that feature. As an auditor, I'd really like that feature, because then I could, when I audit, I can actually take a look at the source document and not have to look it up. Okay. Now, there are 4 main ways to use QuickBooks to record money going out. And we're going to focus in on the expense form and the check form. These two we'll be doing in later chapters. The expense form is the most versatile form, because you're going to pay something right away, immediately, and you can pay it with a check, you can pay with a credit card, and that type of thing. The check form is kind of a subset of expense form. Check form is kind of built more to pay by check. So you can still record a check in expense form, but you can also record payment using a credit card. Here, it's just with a check. Okay, so these are for times when you're making a payment, but you're not running it through accounts payable, right? If you're going to run it through accounts payable, in other words, you record it as a bill and you record your accounts payable, then you're going to use pay bills. And the reason why we do that, we've got to keep track of our accounts payable. So using this system, by entering the bill and paying the bill, we can then manage our accounts payable and what we really owe. And you guys only have to worry about these two right now. These are later on, but we will be focusing in on the expense and the check forms. So what does the expense form look like? Well, we can take a look at it, how we get there. Click on New, and then under Vendors, Expense. Now, with the expense form, like I was saying, that you can, pay immediately with check or cash, and also a credit card. This is what the expense form looks like. In this case, who are we paying? Midget Supplies. How are we paying it? Well, we're going to be paid by credit card, so we're going to use Visa credit card account. This is the liability 2100. Right? Put in the date of the transaction. Of course, it's credit card because we're going to pay by credit card, and we are going to hit the credit card account, which is the liability account. Now, so we know that this is a credit to Visa credit card because it's a liability. But what's my debit to? Well, what is it for? Down here at the category, we say, well, it's for office supplies and software. So we're going to use account 5024, which is office supplies and software expense. We can put in a description of, what it was for, the amount. Now, these two, the billable and customer fields, if you can actually get reimbursed for this, you can check the billable field and then select your customer, and that will become an item that you can bill your customer. In this chapter, we're not going to go that far, so we're going to leave the billable field blank and do nothing for customer, leave that blank as well. If you wanted to add a little bit more information about this transaction, you can use the memo form here, or memo field. And all you need to do is click on Save. Pretty easy, right? Now, let's say that we want to see that the journal entry that's created behind the scenes. Remember, when you have an on-screen form, behind the scenes, it's always going to create a journal entry. Take comfort in that, because it's always the same thing. Just like in traditional accounting, we journalize and then we post to the journal ledger. Well, we're going to use an online on-screen form for the information, and that form will then create the journal entry for you. So in this case, what do we just do? Well, to get to our transaction journal, go More, Transaction Journal, and here it is. Looks like we're debiting office supplies and software expense of $13, and we're crediting the credit card liability account for $13. Like I say, I think it's so interesting that they have these backwards. We teach in accounting that in a journal entry, debits are supposed to be listed first and credits listed second. Well, QuickBooks, they don't do that. So I don't know what it was, if the programmers aren't accountants or what the deal is, but you'll find out a lot. But don't worry about it, because the debits and the credits will always be right. But just they may start out with debits. Let's talk about another way to record money going out, and that's the check form. Okay. Now, again, this is for paying a bill immediately. You don't run it through accounts payable. It just, you pay it right away. And it's really a specialized form. It's more direct. It's for checks. See, expense form, you can still record a check here and cash and credit card, but the check form is designed just for the check. So maybe that's why they did it, to make it easier when you're entering a check. But anyway, to get to it, New, Check. Okay. So this is what it looks like. Again, we're going to pay Bitget Supplies, and the bank account we're using is the checking account. We put in the payment date, right? And this will be automatic, right? It will advance to the next check for you. Notice here, this mailing address just has Bitget Supplies. Had we had entered Bitget Supplies address in our vendor list, this would show up automatically. But when we entered it into the vendor list, we just put the name in, so we don't have the address. But it's really nice when you do it for real. Have more information, because it's going to flow into these forms, so you don't have to worry about typing it in. Okay, we know, because this is a check form, that the credit is going to be the cash, right? The checking account. Well, what's the debit to? What's it for? We'll look under category. Here, it's for office supplies and software. Again, this is office and supplies software expense, and the description is office supplies. The amount we're going to put in is $99. Okay, so we're going to credit checking account. We're going to debit the office supplies and software expense, both for $99. Again, we're going to leave the billable and customer fields blank, because we're not going to bill our customers for this. So leave it blank. Again, we can add more detail to what this transaction is, and we can even attach a source document. I love that feature. Did I tell you I love that feature? I love that feature. All right. And then you just hit save and close. Now, you know something, if you just wanted to save and do another one, if you go to the down arrow, I think you can pick just save, right? So one time in the book, they wanted you to just save, but you had save and close, and they go, well, where's the save button? In the old days, it was another button over here. But what they did, they just save space. And so if you just want to save it and keep the window open for another check, go use the down arrow, and there'll be the other option. Okay. Okay. Now, there are examples of money going out that should not be recorded using the check or expense form, right? It would include paychecks to employees, right? And also payroll taxes and liabilities. When you're paying payroll taxes and liabilities, like federal income tax, state income tax, Social Security and Medicare. Now, so anything related to payroll, go through the payroll system, because we got to keep track of all that stuff. We've got to keep track of, how much we collected from or withheld from our employees' checks and the like. And so when you write the check, the paycheck, make sure you do it through the payroll system. And when you pay the payroll taxes, make sure you do it through the payroll system. Likewise, sales tax, we keep track of how much sales tax we collected. There's a separate system just to record sales taxes. So don't use the check form or the expense form. And I think we've already talked about this one. Bills that have already been entered using the bills on-screen form. When we use the bills on-screen form, we're going to create an accounts payable. So we don't want to pay our accounts payable with the check or expense form because it's not hooked up to the accounts payable system. So if we want to pay a bill we ran through accounts payable, that's going to be the bills on-screen form, right? Okay. I think it actually, maybe in the old days, it's called pay bills. This is going to be done in the future. So I just want to clarify that. So I'll explain this a little bit better in the coming chapters. Okay, here's some fun stuff here. Now we know we're moving into the future because this is pretty crazy. And it's crazy good. And I've been around in accounting for a long time, and this is like George Jetson stuff, that in the future, man. I mean, this is crazy. We can connect our bank accounts and credit card accounts with QuickBooks, and all the transactions that appear in your banking records will automatically download into QuickBooks. And then all you have to do is accept the match or not. For instance, let's say that you've hooked it up and this is your Visa account here. There's 3 transactions that has flowed from your bank into QuickBooks. There's 3 of them that you have to look at. QuickBooks tries to match those transactions on your banking records with what we have entered in QuickBooks. And they said, match found, match found, match found. So QuickBooks thinks this might be the one that you've already entered. So if it is, QuickBooks, yes, you did a good job. You'll just click match and it'll accept it. Click match, it will accept it. Click match, it will accept it. And then you're done, you're up to date. Now, if there's a transaction here that was, that the bank brought over, but you don't have any record of, then you can add it here. That's what that is. So you can, most of the time it's going to be a match, but there are some items that you may have to add. Okay, well, how do we do this? How do we connect QuickBooks to our bank account? Well, first off, we go banking, and then do the banking tab and make sure you're in the banking section. So, what I would suggest is watch this short video. I did. It's pretty good. And you see how it works, right? And we're not going to do it this way because this is not real. This is a play company. But if you were doing it for your own business, then you would go ahead and click on connect account. So if you did do connect account, what would it look like? Well, then it's going to say, well, which bank are you associated with? So if you're associated with Bank of America, then and your accounts are there, you just click on Bank of America button, and then that'll hook it up to Bank of America. And then from there, Bank of America has its own procedures to securely make that link between the bank and your bank account, right? So there's no we're not going to go any farther than that because every bank's going to be a little bit different. But now, how are we going to do it? Because this is play. This is pretend. This is a pretend company. We're going to do it using upload transactions, right? So that's what we're going to do. You're going to click on upload transactions. And what you're going to do is I've provided you with these Excel files that has the information. What you would do is you would export your bank statement to Excel, and then from that Excel spreadsheet, you would drag and drop those that file into here. But the author's already done this for you, and I put the files in a real convenient place for you. So where do you get those transactions to upload? Well, see the next slide. For your convenience, within the Chapter 4 module in Canvas, I provided the 3 Excel files you need, and they're in that CSV format. So you can click on it, and what I did is I download the files onto my computer. I created a Chapter 4 folder on my desktop to put them in, just to keep them in one place. From there, I just dragged and dropped the needed file into QuickBooks. And of course, you can see what that looks like on textbook page 209. Well, I can show you what it looks like. There it is. That's what I'm talking about. You drop it right in there, and then you're good to go. Once you do that, then you can start matching or adding. Now, if you don't like my way, I don't know why you wouldn't. It's real convenient. You can still get those files from myquickbooksonline.com. That's where I got them, but I put them in Canvas for you so you don't have to fish around. Okay. So once you do that, and you upload them into your, or download them into your QuickBooks, again, you're going to have a notification here that there are 3 unmatched items. And what happens is that transactions that are entered into QuickBooks are identified as a possible match to the uploaded transactions. If the match is not correct, it can be edited. So you don't have to take it. In our example, it's really clean. It's going to work, right? So all you have to do is click on the match to accept the 3. Now, you're not going to have to do this in your work, but if there was an item that was pulled over that QuickBooks says, well, I can't find it as a transaction, do you want to add it? And then you can add it, right? Like I say, you don't have to do it. You're going to be doing the match. Okay. Okay, that's kind of how it works. Now, section 4-6, the accounting essentials. It's kind of nice. It tells you, kind of what the accounting theory is and all that. What's interesting about how we're doing it now is that in the old days, I taught like how to do a bank reconciliation. We would actually take a bank statement that's from the end of the month and then compare it to QuickBooks and then reconcile it that way. But nowadays, companies are choosing to use the bank match feature. And so, and if you link the bank account to QuickBooks, they kind of flow in there, and then you just kind of every day you can go, okay, yeah, that looks good, I'll match it, make it looks good and match it. So instead of using the bank reconciliation once a month, they just kind of do it real time. Okay, but because I'm old school, I did include in these slides what a bank reconciliation is, and how we would perform a bank reconciliation in QuickBooks. Now, I'm not going to go over it because in your book you don't have to do it, but I thought, well, I'm going to give it to you anyway. That's kind of like my value added. So let me just show you quickly what the slides are. You can study this. A bank reconciliation, compares the bank statement, with the book balance. And then we make sure that, that we included all the items to make it, to make them balance, right? Typically in a bank statement, you've got deposits in transit and outstanding checks. And typically adjustments to the book balance would be like a service charge, right? Service fees. But anyway, this is how it kind of works. I mean, you have a bank statement of 900, you got a checkbook balance of 1,000. Hey man, is the bank trying to rip you off? It says you have 900. We know we have 1,000. Well, no, because there was a deposit that we recognized in the checkbook balance that raised it up for $150. But we looked on the bank statement, it's not there. Are they trying to, rip us off? No, it's a timing difference. Next month, that deposit that you included on the checkbook balance will be included on the bank statement. Right now, it's not, so we got to add it in. And you say, well, man, I'm going to quit right there because I'm ahead of the game. No, there's another thing too. You wrote a check for $50, but yet the guy that you paid hasn't cashed it. It's in his billfold, and so you wrote it, but the bank doesn't know because it's in your payee's pocket, right? So we have to include it on the bank statement. And with that, that's an outstanding check. So now your bank statement and checkbook balance is agrees. $1,000 adjusted bank statement, $1,000 adjusted checkbook balance. You can take a look at an actual bank reconciliation. I've actually done this in Sage 100. We actually went through the whole thing. This was a case study that I did. And then here is a way to reconcile. I'm not going to go over it, but these are the steps to actually do a bank reconciliation. You'd start reconciling, and you enter in all of the items that on the bank statement that appear on your records in QuickBooks. And then hopefully the difference will be zero, right? Everything that's on the bank statement you've included here. And then you just click finish and done. So I'm not going to, like I say, not going to spend a lot of time with it because you're not going to do it. But if you have a business or you're working and your boss does it the old-fashioned way, you can take a look at those slides. Maybe it could help you. Finally, we do have these QuickBooks Online videos, and you can find them at myquickbooksonline.com. For your convenience, I put them in each of the chapter modules. I haven't even looked at them, but eventually I might look at them. And if you have time and you think it's beneficial, go ahead and do it. I'm just so overwhelmed with what I'm doing. I'm just barely making it. So, but those are definitely different resources that can give you more depth of understanding. Okay, so that's it for me. I'm going to stop the share. And okay, I hope you enjoyed the video, and this chapter 4 will go smoothly. I can see that there's not a lot of updates. Praise the Lord on that one, right? So that's really good. Okay, until next time, happy studying. Bye-bye.